Hey everybody, welcome back to our class where we talk about swing trading. My name is Mike Fairborn. It's great to have you here today. Hope you're enjoying the volatility in the markets. We're seeing quite a bit of moves out there, and given the market conditions, we're not exactly seeing a lot of scenarios that might set up for a let's say a bull flag scenario for the swing trades to the upside or the swing trades to the downside. But fear not, they are still out there. A lot of stocks out there to take a look at, especially when looking at the S&P 500. Today, particularly, I wanted to focus in on volume and really making volume kind of count. Wanted to give volume a say in market conditions, and I think that's an important element that we could look at right now, given current conditions with the S&P 500 as well as other markets as well. So I do look forward to going through that with you. I'm joined by many of you that I do see in the chat. It's great to have you on board, Brown Buffalo. We've got Bell. You might be new, Bell. Great to have you here. It's not exactly Bell. It's Bell. It's a little bit, that's a shorter abbreviation, but nice to have you here. Nonetheless, we're in this class, we do look at short-term trading, normally 3 to 10 days or so, 3 to 14 days, right in that range. But welcome to all of you new that are new. Great to see back our returning veterans. We've got Kenneth, Jay Richardson, Life of the Fast Lane, David, Alfred, Andrew, and some others. Yeah, Desert to have you on board. I'm joined in the chat by Cameron May. Folks, you can follow us both on X. My handle's listed right there, Mike Fairboard CS, as well as Cameron May CS. Encourage you to give us a follow. Folks, with that, let's turn some time over to disclosures to get past that so we can dive into our discussion today. Now, the information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Options carry a high level of risk. They're not suitable for all investors. Okay, multiple leg option strategies will involve multiple transaction costs. Spread trading must be done in a margin account. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for education purposes only. Investing does involve risk, including loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price. Now, past performance is no guarantee of future results. And with that, let's turn it on over to the markets here. And before I get started here, I'd like to welcome Beth. And Beth, before we get going, I wanted to share this with Beth. And many of you might have questions on any of the scripts that we've got and how to put those in place when we do share those. A quick note on that. Say, for example, just quickly, I wanted to highlight this. This is from an earlier discussion. I just mentioned to Beth that we were going to share this real quick because it is important to know this process. Down here, I do have this sector grid, and I can share that grid. If I just go down and actually under share, I'm just going to share it. You don't need to know this part, but I'm going to go and share that right now. Once I have this grid shared and I've got that link, let me just post that link into the chat box so you've got it. Now, you can copy that entire link if you want to get what I'm going to show you right now. In fact, I'll just point it out so you can see what it is. This is it right here. That's the sector grid. Kind of useful. It's got all 11 sectors plus the S&P 500 index down here. Gives us some trends, and we've often used that. We'll look at it again today. But as a quick note, what you can do, once you copy that from the chat, go up to the top under Setup, click on Setup, and then just go to Open Shared Item right there. Since you've already copied it, just go ahead and paste that into the box. I use Control V. I'm on a PC currently. I would use, Command V, I guess, on a Mac to plug that in. But there you go. And then just click on Preview right there. And voila, import it. You've got it there. And when you have it, when that shows up, what you're going to be able to do is you're going to be able to find that listed over into this section over here. Okay, it is a chart that I'm sharing. Now, this was for Ben earlier. I just wanted to highlight this. It's a good refresher for those of us that don't know. But Beth specifically, in that class and in Ben's class, he was looking at a different layout here of a chart. And that would be in the description section of YouTube down below. So you'd want to copy that, find that class that Ben had today, go down below, copy that, and then just do the exact same thing I showed you. Set up top, open shared items, bam, post it in, preview, load it, you're good to go, Beth. All right. Promise, Beth, I'd do that. I wanted to make sure we hit that because it is good to know, and I do it just by habit, so I forget that sometimes, not everybody knows that. I was right there with you, Beth, for sure. We all were. All right. Well, having said that, I do want to dive in. Let's look at the markets here just initially. First, SPX. I wanted to highlight a couple of areas, and I did mention to you today the importance. I want to bring up the importance of volume considerations as well. Now, right now in the market, though, just big picture, and I know you guys have heard a lot about this probably throughout the entire day today. So I don't like to overwhelm you with that. You've probably seen it, but one of the areas that I've been talking about for the past, well, couple weeks is really that 200-day moving average. And that moving average, as you can see, is just above where we're at right now. We did break below it for the first time in a while, and we were holding above it. We're holding below it right now. I sent out an X post, is I guess what we call them now, an X post, just highlighting the fact that there is another range down through here. There were some major prior highs, and I was curious if we would hold at this level. Now, it turns out we did, and that might be initial resistance, as we could just see right there. You could say that'd be a resistance ahead of maybe the 200-day resistance. So whether, maybe you'd put a small r versus a little r in there, kind of emphasizing that resistance. Normally those historical levels, they might tend to be pretty big resistance. I'm just going to put a couple of r's in here. There could be resistance here. We're seeing a little bit. I'll just put a question mark over here. But these are some areas to watch. And what do we talk about in this class? Well, a lot of times we talk about bull flags and bear flags with the trend. This is important to know because when the market does it, it might have several additional conditions for the underlying stocks within the market as well, right? And that's one of the key things that we look at. And if you come down here with me, and we just take a look at this, folks, that was a pretty big decline. I mean, we were waiting for a flag, and we got one here. Now, what's interesting is this? I'm curious what you think. Throw those in the chat if you wouldn't mind. Is that a bull flag scenario, or is it more of a bear flag? What do you think in this case? Bull flag or bear flag? And a lot of times we say, it's with the trend. But there are some, sort of tricky elements here that we're looking at. Okay? Right? A lot of times when we see a position like this, I mean, I could draw this and say, well, there you go. Looks like a bull flag to me, right? And we're actually making way. We're coming out of that bull flag and we're going higher. Or we could say it's a bear flag with the anticipation that prices are going to go down. So the bull flag portion actually would be somewhere like right in here, right? We're saying, there's your flag, and here's the bounce of the flag. Does that look right to you? Does this bull flag match what we've seen over here? Or is it too soon to say? Take a look at this. Let's look at it right now for some guidance, some indications here. And I'm just seeing what we've got. Okay, looks like bear. I'm seeing a lot of bears and some browns saying bull. But yeah, you guys, okay, so it's kind of a toss-up. Look over here with me on, this was a rather large pullback in the market. But if we were to use this as a guide, notice that with a fairly large pullback, you might have a pretty big expectation. Did that break a low over here? It did. It broke that low. You could say there was some lows over here. Shoot, folks, you could say there was some lows over here. Right? It broke those, very similar to this up top. Look at this, break, even break over here. And yet, here we are, we're waiting. This is really kind of the moment of truth. And what I mean by that is, if you get a pullback like this, and it's going to be a bull flag, you're going to generally have to see, and it just stands to reason, higher highs and higher lows almost on a day-to-day basis for that move to come back up and show you near the prior high, and the possibility of a bull flag again. What you wouldn't want to see is prices come down and struggle at resistance right there, and then possibly come down. That's where it starts to look more like a bear flag. And today, if we're looking at it today, if we're looking at it carefully, look at this. We had a 2-day up move. We came back down right off where? Right on a Q, right at that longer term resistance at that 5660. Okay. And we're kind of coming over. Would you say that could be a close below the low of the high day? We can't say it yet. We still got about 15 minutes to go before the end of the day. But if we close below the low of the high bar, that's a below CB close below the low of the high day. Below? Yeah. That's what I think it looks like there. But it could be, it's not, we don't have one yet. Okay. But it could be at resistance and then we're coming over. Look at this. By comparison, by contrast, over here, look at this low right there. See the bounce up? Where's our resistance? Our resistance is right there. What did we do through resistance here? Folks, we simply fired right through resistance with a big green candle, and we kept on firing up. In fact, we actually gapped up a little high. I just have to say it right now. We are below the 200-day moving average as well. So I bring this up, keep that in your mind. Now, yes, and by the way, Brown Buffalo says, hey, we're down around 37. Well, look at the RSI. We're down here. We came back up off that level. But what traders will look at is, are you below the 50 or above the 50? Now, currently below, and this is where they would say more like weakness, and this is more like strength. Now, this isn't all traders, but this is one read, one key read on the RSI, the RSI. That's how they'll look at it. So really not seeing any strength yet. Now, if you got above the 200, you might get that, but that remains to be seen. And the longer it pauses and the more it shows weakness, the more it falls into that bear flag category. I mean, it starts to define it real quick, all the way to the point where you're starting to make a new low right there. Look at this. If you go bam right there, then you're making a new low. And that by definition is a bear flag because you are making a lower high here, clearly a lower high, and a lower low if that scenario were to unfold. Now, I want to spend quite a bit of time on volume here. And so I'm going to go over here and just type in ES just to take a look at the futures in this context. We don't trade futures in this class, but we can look at the chart. Now, notice over here with me, because we get volume. We've been talking about that. Look at the volume. Whoa, volume's building. What are the prices doing over that same time frame? Declining, folks. We're getting some strength. And I really wanted to hit today some of this right down here, the money flow line. Now, money flow, comparatively speaking, let me show you where money flow stands right now. We made it all the way down to this level. Look at this. If I draw this over here, and I hit price, we're currently below that level, but we haven't seen it that low for some time. This is the concern, is that if we start to go sideways a little bit here, and you'll notice we're breaking a little bit lower right here, if we start to break a new low, let's put it in red, right over here. If we break new lows, this is our money. This is our well, it's the money flow, but it's kind of our volume, I should say, volume indication of possible weakness. I'm going to turn this into a red in case we do go down there. If prices don't make a new low, but money flow starts to, okay, that would be construed by the traders that use money flow, right? Which is an indicator that tries to net out buyers versus sellers of weakness. So keep a watch on that. We're going to be looking at a few stocks today and looking for strength. But this is the AES. This is the NASDAQ. Below the 200. Okay. A little bit of a flag. There's the Cablode, possibly. Close below the high day. Not yet, but we'll see if it ends that way. It certainly might. There are some that have been moving. I want to start here first. Look at gold. Gold's remained quite strong, and there are some reasons, that gold has been strong too. There are some indications within the general market. There's what they refer to as a perfect storm in some respects. You got geopolitical risk out there. You got some wars going on as well. Central banks have been hoarding, meaning that they've been buying gold. You've had China, you've had Russia, you've had India purchasing, stockpiling gold, taking more, out of the mix out there and making prices more sensitive. You've got a shaky dollar, and then you've got investor enthusiasm, and you'll get enthusiasm when you start breaking highs over here too. That's a high break. Look at the money flow over here by contrast to what we were just seeing, making new highs. In other words, volume on up days is supporting the underlying price trend. The price of the stock is going higher, right? We try to find strength in this class when we're looking at bull type flags. It's one of the key areas that we'll look at in this class, right? Is a bull flag, that formation. This formation right here that we've talked about a few times in the class, which is really kind of a staple of what we discuss here in this class, which is a strong move in the direction of the trend, followed by a relatively mild consolidation given the strength of the upward move, right? And that's what helps to build, it's this pattern right here that helps to actually build a strong trend to the upside where you're getting a series of higher highs and higher lows. And traders are very, very interested in this flag portion, right? It looks like a flag right there. And that's what we're talking about. Well, when the price of gold goes higher, and by the way, when they're looking at this, they're looking at it for, like I said, a 3 to 10 day run, a 3 to 10 day move. They're just trying to capture the strongest parts of the trend as they look at it. We've got 3 to 14 days from time to time, but you get the point. It's 3 days to maybe a couple of weeks on those moves. Now, gold itself breaking above highs and not really showing a lot of resistance here. What's interesting is when the price of gold goes higher, and I like to do this, I like to highlight this right now. So if gold itself, let's just try to draw this out. So we've got gold over here. And if the price of gold goes up, which it has been on that chart, and it continues to go higher. If you have companies that mine gold out of the ground and they get the gold out of the ground and they sell it for higher values, we have to revert back a little bit to some of the basics of accounting. What does that do? What does that do to there's a big read over here. It's called sales or revenue, right? We know that. But the sales numbers can go up as well too because, well, gold miners are selling gold. They're mining gold and they're selling it, right? And the demand is high, so then a lot of times they try to dig up as much gold as possible when gold prices are going higher. And a lot of banks and institutions have been talking about, well, gold breaking a big number up here. You haven't heard a lot about it because there's a lot going on in the markets, but folks, that right there is 3,000. So we're trying to go to those areas where we're seeing strength in the market and how this could relate specifically to stocks out there, gold miner shares. Okay, now there are some companies that have gone up with the price of gold. Agnico Eagle has broken up higher. Do you see the flag there, the flag pattern? Where does this flag go? If we're looking at, just drawing it like we've talked about, here's the pole of the flag, the pullback, and all we're doing here is just measuring prices, and we're saying off that low, if we go up higher, that is the initial price target, or I should say the price target for a bull flag pattern. We have some room to go. Maybe it could consolidate a little bit again, still run up. We'll see. That's the question. But this one's already run. There are some other bigger names out there. I would just say big. I would say, okay, so larger companies is what I'm trying to get at, that have a lot of volume associated with them, like AEM. Here's AEM over here, about 2 million shares today. Well, what about this company over here? What about NEM? What about Newmont? It's got about 7 million shares, and it's a little bit of a laggard, but still could be heavily influenced by the price of gold. Look where we're at right now. If gold's breaking 3,000 and that sucker just keeps rolling, and it's been on a long-term trend, this could be a big boost for these companies, collectively speaking. Okay? So as you look at this, well, do you see where the longer term, just like we saw in AEM, where the longer term flag pattern might terminate, the target? Here is that upward move right there. And that's the move in price. It's from low to high right there. That's the price move. If I click on it right there, duplicate it, just using Thinkorswim tools, a great tool to use, I can drag that guy right over here and say basically that there's still room here as well. And by the way, we're just breaking a resistance level right here, but we might have the strength of those gold prices really helping, give us a boost possibly up to these levels. Now, we've hit some of these highs previously, and some might even say that, Mike, what I'm seeing over here, see if anybody's put it in the chat, maybe not yet. Now, some of you do like the old cup and handle, I know. There is also an inverted head and shoulders pattern right there. Do you guys see it? Because if you do see it, I'm gonna go like this. Just put a smiley face around there. Okay? Just kidding. But you get my point. There is a shoulder, head, shoulder inverted as well in there. And with those rounded bottoms, sometimes you get this sort of cup and handle-ish pattern, which could be even a larger target, maybe closer to these resistance levels up top here. Okay. Prior highs. Now that's the question. That's one we can look at. There is too a little bit of a prior high coming in right there. We hit T1 target. So the T1 target has been hit, which is to the prior high. Now the T2 target would be up here. T2 is up a little ways. And with that, a lot of times what we'll say is if we were to take this target, I might just want to take a look at one today. I'm going to look at another company here. I'm going to give a comparison. I want to do actually a poll on this here as well. But between these two, but a lot of times what traders might do is they might say, well, Mike, we might be, since we are above or getting close to either the simple or the 10-period moving or the exponential 10-period moving average. Some even use a 9-day. You get the point. It's short term is what it is. A short-term moving average right here. Notice we are above that level now. Let's change that color. We got a lot of green here. Let's just go to blue. We don't have blue. There we go. Okay. So there's your blue right there. And so some might say, Mike, you know what? This is kind of a sort of a, like right now, as long as prices stay up, we might see it as being a trailing sort of a moving average of prices coming up, but they might put exit somewhere below here ahead of the target range up top here because prices are breaking this level. Okay, and that moving average is bound to jump up a little bit tomorrow. And so that would cut out maybe a little bit even more range if in fact, we put an exit below that point. So that's one consideration. You saw the volume on NEM as well, but that's the possibility of a flag pattern follow through. It's a little bit late in the game, but gold did break out and you can see it right there. Now, if we come over here and look at just like gold itself, here's gold. Gold, I've got a lot of stuff written on gold. I'm just going to narrow it down into here to kind of highlight too that it does have a bit of a head shoulder pattern over here, and maybe even more of a cup and handle right there with a follow through. Now, this might even have a longer pattern projected to the upside, but this is the other one I wanted you guys to consider. Just technically, they're very, very close. I would say that this one has already, broken out. So we took out the level already. I realize it's come down a little bit here, but you can see the 10-period moving average is a possible exit. Oh, Wiley said, yeah, fibs, and you can see I've got some fibs on here too. Yeah, and the fibs are really, really interesting, particularly longer term as well. What I'm going to do is I'm going to go over here and I'm going to start a poll. Let me get you guys in on this. Let's turn this into a, what are we going to turn into? A democracy? Is that what they call it? Yeah. So here we go. Well, I'm going to have you select between these two for a scenario, a setup here. Okay, so the first one is going to be, so NEM, and the second one, it does have the symbol of gold, but it's not gold. It's a gold miner. It's referred to as Barrick Gold right there. Okay, so let me just plug this in. We're going to choose one of these. Now, Barrick Gold tends to even have more volume. Barrick Gold has about almost 24 million shares traded today. It's very liquid as well. So let's take a look at gold and we'll go from there as we break this down, okay? Yeah, let's get those polls back into the mix. By the way, Wiley said that. I think we were looking at NEM. Let's go over here, Wiley, and just take a look at the fibs. So what do the fibs show here? By the way, okay, a couple things with the fibs. Let me do the price projection on the fib first. I'm right down here at the bottom right-hand corner, just clicking on the drawing tools. If you choose this percentage to the right, fib extensions, I can click here one time, pull it up again, bam. There's the projected number at 100 right there. Well, very close to the number I've got right there. So about 53.16. Notice what I did? I just did a click, click, and a click, and it gave me right there, which I really appreciate Wiley bringing up because that's a really quick way to give you the projection where it can stay on the chart and it gives you the number, gives you a number as well. That wouldn't be for an inverted head and shoulders. It wouldn't be for a cup and handle. That would be for a flag type pattern. That's one way to do it. Another way too is to draw off the top Fibonacci's. We'll pull it down to here. And oh, geez, that slipped. What the heck? It slipped right off the chart. I don't know what. Wow. Too close to the top, perhaps. Let's pull it down here. Do I have the right one? I don't. I've got percent %R. Oh, that'll throw it off. Okay. Percent %R, yeah. Not percent %R or R or whatever. Let's go down here, click on it. Right at 50%. Look at that. Look at that. I don't know what you were doing, Wiley, but you were onto something there. Because that's one of the big numbers. You know, getting above 50 could be very, very bullish. It just so happens 50 is right at the prior high. In case you can't see my arrows, high and high right there. So getting above it could be interesting, right? So, yeah, there's some interesting things with that. So great addition, great addition there. Okay, that's the poll. Oh, dang, I didn't put the numbers in. Shoot, you guys, I'm so sorry. I got to redo it. Let me redo the poll. I just saw it. We got yes and no. Okay, so I think NEM, dang it. Sorry, let me redo that. My apologies. I've got to put it down below. Okay, I've got to put in the the symbols. Makes all the difference in the world. Otherwise, we don't really know what's going on. There we go. Start the poll. Okay, sorry about that. We'll let it sit for one more second. Go from there. By the way, as you're looking at the poll and you're in that section, just a quick note. Wanted to highlight that there is a survey in the chat. Cam has posted that in. I appreciate that, Cam. Folks, if you like this kind of content, if you kind of appreciate looking at these swing trades in this format that we've got here, smash that like button. I'd really appreciate it. It does help with the YouTube algorithms as well. And great to have you here, by the way. Always awesome. By the way, be sure to subscribe to bottom right-hand corner of the screen. Just smash that button. Love to have you on board. A couple of buttons smash if you're interested in doing so. All right. The volumes, though. Volumes are showing strength to the upside. Look over here with me, folks. Look at the volume. Collective volume, we've already broken the high. Even though price-wise we're trading down here at the high, we have not broken above just yet. By the way, you guys were voting for NEM, I believe. So I'll go ahead and we can thank you for voting. I really, really appreciate it. We got 22 votes in there. And we will call it and see where we're at. And the poll, where are we here? We've got 31 votes. Excellent. But we're still in that range. So basically, yeah, 70-29. Perfect. Okay, great. Now I wanted to kind of break down a little bit more of the technicals for you as we're looking at this. You can see, yeah, so a few things. The one I was going to highlight, though, is really that collective volume. Making volume count, giving it a say. Collectively, how do we stand? We broke a new high here. But you can see where we're trading right now. We're not trading at highs. We're actually below those highs, yet money flow is giving us that positive indication. All else equal, through the trader's lens, as they're using this indicator, that is, in fact, a positive. That's a positive right there. Okay? Now, will it go higher? We're waiting to see on that. Right now, we have to say it's still kind of right at resistance. But what we can do is, I'm going to go ahead. Now, normally in this class, we'd be waiting for, a close above the prior high range. But we've selected this one, so I'm still going to put the trade on, but keep in mind that's generally what trader investors might be waiting for. They might be waiting for a break, a close above that level. Okay, we did mention what is one of the key drivers here? Price of gold, /GC. See it breaking out? Also confirming down here the money flow with price, although this is an early signal. This is what you refer to as positive divergence. It's not a guarantee, but it's showing that a lot of times, you get this kind of buildup. Sometimes this can lead price action. Volume, buyers can come in and help to push that up. So let's get this set up in this scenario here. What we'll look to do is we will have potential stop area at or near that moving average down here. So you have to be comfortable with the amount of units that we're purchasing, but that is like right there at, I'm just going to say, yeah. So if we look at it right now, 45.87 as you can, no, I'm sorry, 44.83. I'm just looking right there, 44.83. We're going to put it below there. I'll just do 44.75 as an example in terms of a potential stop in here. Our anticipation is that we can raise that stop because likely if prices stay where they're at or go higher, that 10 period moving average, we're only looking at the last 10 days and prices have been going up, should jump up. So what that's going to do is our potential risk could start to decrease from day to day as the 10 period moving average is going higher. So I'm going to set it at 44.75 right now, but like tomorrow, it could be clearly above 45. Okay. And that would minimize that. But we'll look at a target potential up here at about 52. And it's really 52.50 range would be a potential exit area. Okay. So let's do a one cancels other order on this breakout. I realize this is short-term range, but looking at it directionally, let's look at the price right now, 52.50 and 44.75. Okay, here we go. And there are some of those options there. We've been talking too about selling short put strategies. We've had some of those that have been sitting out there in the market for a while. When the trend is not as defined, we can maybe look at some of those in just a second. But for now, this is just up and on the ask. I'm going to right click. I'm going to buy custom. It's going to be an OCO bracket order in this case. Okay. We'll just do 100 shares, just a round lot. Okay. I'm going to put our potential 2 exits in here as a good tail cancel, of course. Very, very important to do. Okay. So we know we want to have our upside. We have the upside set at 52.50 range. And we have the downside at 44.75. And that's the scenario, the setup right now. I'm going to hit confirm and send so you can see this. But again, yes, so we're buying 100 here. I haven't put that as a good tail cancel. We'll just see if we can get a fill on it roughly in this price. In fact, I could unleash that. Well, I can't do it yet. Let's just see if we get a fill on it. We're trading in that range. Yeah, we should. It looks like right now if we get it, but then you've got to sell here at the high side, the target, and then you've got the potential stop. And we talked about the stop orders in the initial disclosures as well, right? Okay, so here we'll send that on. We should get that fill, and there we go. Now, adjusting that stop order, it could be as simple as, like I mentioned tomorrow, if that moving average comes up, we can just put it below that moving average, for example, is one approach that we've talked about in this class. Now, some of you have used that shorter term moving average like an EMA. It's a little bit quicker, but let's just take a look at it right now. It should be very, very close. I want to highlight it. Exponential EXP is what you want to type in here. Let's go ahead and go with the 10 as well. 10 period exponential. We got to change the color completely so we can see. Well, let's go with a yellow. Should stand out pretty good. And here you go. Does it lead? It's a little bit quicker, right? If we were using a 10 period exponential like I believe Wiley does or some others, what you would simply do is just pull it up right there underneath that yellow. I'll do it just as an example. Pull it up right here, put it right below, and that puts us closer to, see how easy that is? Drag and drop. Am I confusing you guys when I move between one or the other? I'm just showing you some examples here. You can use an EMA, which is tighter, or you can use, the simple moving average. We could choose either one. Okay, EMA definitely hugs it closer to price. It's taking more of the more recent data, more recent days, you could say, in factoring what that moving average level would be at. Well, we'll go ahead and just point it to that level, and we've got it. So there you go. So you got gold, you got NEM, Newmont. We chose NEM, and we went from there. But that was kind of an explanation of those two. Now, what other areas can we look at for maybe some of the bullish scenarios? We've been seeing some interesting things in the market. In fact, I mentioned this, AMZN. Folks, where's the flag pattern? Some of these have just been negative, Meta, big names. Look at us coming down. We're right near the 200-day on Meta, right? Apple, Apple recently, it's just been really, really light. Now, some of these could be bear flags because that is truly a downward trend. And we need to be looking for the possibility of that, but we're not getting much of a bear flag here. If we were to zip over here a little bit, notice there's resistance, just like we do on the other side. This resistance level right there, and there's plenty of it. Look at this, all the way back here, right around that 220. If prices just sort of meander up here, just kind of maybe zigzag up a little bit, that's very, very weak. And if it starts to dip back down, that is a very interesting bear flag to take a look at, honestly, because it's already trending lower and it starts to break right there. It could be interesting just looking at it from the chart pattern. I'm just saying for a paper money trade, well, that could be interesting because it's such a weak recovery right to resistance. Now, it hasn't happened yet, but that's sometimes what traders will look at. Remember when we reverse these upside down? Let's do it right now. So let's go over here. I'm going to reverse this apple. Wow. Doesn't apple look great when you reverse it? When you turn it upside down on its head just by putting that minus sign over here? This just helps us kind of see things a little bit better. You notice how I just said to you guys that if the price of apple comes right back down to this level, right there, and then potentially goes, I was just saying that, flipping it upside down on the other end. I was just saying that it might come down to this level. We're just looking at it from the other side. Notice what else is there? Well, you get your EMA, 10 period, and you get your other moving average. If we take out our minus sign and look at Apple as it actually is, if I could actually do that, there we go. There you go. Now, all I was saying is that if you bounce back up to that level, bam, potential resistance there with your moving averages. These could be interesting. It's so tricky right now because we haven't quite got there yet. But it could still break, and there could still be a trade in there. Okay? Now, there are a couple of others that I wanted to look at that have been showing strength, and they're a little bit more resilient. You guys, remember we did this trade on Verizon? We did the inverted head and shoulders pattern. We hit our target over here. The target was hit, and we got out. It was an inverted head and shoulders off the bottom right there. We took out those highs, and we rallied. Okay? Well, if we stay in the same group, we've got AT&T. Long, strong upward trend. Maybe it is that people aren't willing. We see some conditions in the economy right now where it gets a little bit tight, but people aren't necessarily willing to give up maybe access to their mobile phones at this point yet. Maybe it's necessary for their jobs or whatever. It might just be defensive to a degree because obviously this is kind of bucking the trend of the general market. And you can see that right there. Look at this. Look at us break up here. Can you guys see the flag pattern there? Okay. Now this company does have a yield of about 4.6%. Now, obviously, when we look at dividends can be cut at any time, but this is a dividend aristocrat. As you can see it right there. There's some dividends here. Now, if you were to look at T, and then if you look at T-Mobile, which of these two will look interesting to you? Are there any considerations? We're going to break it down. There are some similarities. One substantially higher price, by the way. This is $260. It doesn't necessarily change a lot. You can just adjust the purchase price. We can do that in paper money. But there's T, and there is T-Mobile. Long-term potential flag patterns right there, as you can see. Now, we've got one more poll. We'll do this one kind of quickly. But I just wanted you to see where you guys are at, because we can really choose either one of these two. There we go. So it's going to be either T-Mobile. Okay, I listed that one first, or AT&T, symbol T. Let me know where you guys stand on this. This is kind of it's interesting because this pattern here is a little bit more longer term elongated a little bit, okay? And it's coming off of a very interesting kind of a move over here too. It's kind of it broke this trend line. It's breaking up. By the way, we're very, very close to making a high over here, getting above. Let's see, we had a K-hold right here, a K-hold, and here we are just getting above the, geez, we're just barely there. The moving averages, as you can see right there. Now, will we hold? That's the real question. Will we hold here? What about T? That was T-Mobile. There is AT&T. It looks like we're above the moving averages, a little bit sharp off the bottom here. And if I did have to say, and I draw this, because this was another technique that we looked at, because you had the hold right there. Look at this high, drawing off this high. See the trend line break? Just like sitting on it. Yesterday we touched it. Today we're touching it. We're like right at it with those moving averages. Will that be enough to give us a boost higher? That could be a question. Right now, folks, somebody's got to cast the winning vote, because we're at 50%. It's at a 50-50. Who's got the winning vote? Okay, there it is. It's going to be AT&T. It was very close for a while. We've got 19 votes, though. Okay, well, we tried. We got 19 votes, and there you go. There is T-Mobile, and that was T that actually T1, just barely, okay? Appreciate you voting, though. And there you go. So T is one that's just actually broken above that, and it's just kind of holding. So it's a really, really sort of an interesting scenario here for AT&T. It's just getting going, too. Now, will we get a bounce off that moving average? That remains to be seen. I want to put, we have not yet hit the T1 target. So what we're going to want to do, there's your T1 right there. And so a lot of times with the T1, what we're looking at is either, the prior day's low or an ATR. So a lot of times we could look at an ATR, an average true range, for a potential exit on this. We want to keep it relatively tight, because initially the move to the upside is very, very tight. Look at that. We're so close. I mean, that's the potential gain for some that might even want to take a short-term trade, very short-term. So we want to keep, the downside also in check the best we can, try to measure and monitor potential risk. So let me show you what the ATR looks like here. An average true range. The average true range right there is about 70 cents. If we look at where we're at right now, I'll pull this down to 70. There we go. We'll pull this down right there. 70 cents is about right there. Yeah, it's about those. You can see it. We'll do an ATR about 70, 71 cents. I will just say 70 cents roughly off that level, okay? So what I can do is we can look at that. By the way, quick note, you see some strength within money flow over here? Look at this, money flow. Getting back to volume is a key point, making that volume count. Every single one we looked at today had very, very positive money flow that we looked at for potential trades, okay? So there you go. See it going sideways? Prices have been going down, but money flow has basically been going flat. As a matter of fact, money flow could have been on the verge of breaking higher even. Let's put the trade in right now, and let's set that up. So we could have an initial target here. I'm going to leave that open because look at the longer term target. Folks, I'm just going to draw it in, eyeball it real quick. Look at this. Here's the move up in price off that bottom. If I take and just estimate with my eyes, that's the next price target, perhaps, if we're using a full T2 target range, okay? All right, so here we go. Let's go to the trade. I'm going to go ahead and right click under the ask price. We're going to buy custom with the stop. We're going to put this down. It was about, we'll leave it in for $1, but I'm going to adjust it on the chart and show you how that works, okay? Just 100 shares, round lot. It's an example trade right here. And there's your 100. You get a sense of the margin requirement. I'm going to go ahead and send that in. There's our fill. And back on our chart, I'm going to zoom in on this now. And I'm just going to raise this up just to about that level we were looking at, about 70 cents right there. Confirm and send. Boom. Okay? So set up for a bull flag. Folks, we had a couple of these in here. Time is up, but it has been great being here with you today. Hopefully you found this informative and useful. Again, in this class, we do look for strength when we're looking at bull flags. We're not quite there on the bear flags yet. There are some that are getting close, like, for example, Netflix for the potential downside, right up to resistance up here. This could be one, but we like to look at strength, and we did that with gold today, gold prices, right? Really talking a lot about strength there. We're talking about volume indications, so we did that as well. Folks, if you like this class, again, consider smashing that like button. It really lets me know you find this discussion useful. Be sure and hit the subscribe button as well as the survey. All right. Well, everybody, it's great being with you, and we'll keep an eye out for those flag patterns as well as other sorts of potential price patterns out there. Look forward to this class each and every week. Everybody have a fantastic rest of the day. See you next time.